Whether it's your first home or your fifth, it's always important to know all the facts when it comes to buying a home. Now, there are a ton of mortgage programs out there that allow you to purchase a home with less than a 20% down payment. But when you make a down payment of less than 20%, you're going to have to deal with private mortgage insurance, or PMI. And that's what we're going to talk about today, private mortgage insurance. Hi, I'm Bob.Woolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. When we come back in 8 seconds, I'm going to explain what private mortgage insurance is, when you're required to pay for it, and how it can affect your monthly mortgage payment. So stick around. So, what is private mortgage insurance, referred to as PMI? Freddie Mac defines PMI as an insurance policy that protects the lender if you are unable to pay your mortgage. It's a monthly fee rolled into your mortgage payment that is required for all conforming, conventional loans that have down payments of less than 20%. Once you've built equity of 20% in your home, you can cancel your PMI and remove that expense from your mortgage payment. As the borrower, you pay the monthly premium for the insurance policy, and the lender is the beneficiary. And then Freddie Mac goes on to explain further, the cost of PMI varies based on your loan-to-value ratio, the amount you owe on your mortgage compared to its value, and credit score, but you can expect to pay between $30 to $70 per month for every $100,000 borrowed. And according to the National Association of Realtors, the average down payment for all buyers last year was 13% down. For first-time buyers, that number actually dropped to 7%, while repeat buyers put down 16%, no doubt aided by the sale of their previous home. This just goes to show that for a large number of buyers last year, PMI did not stop them from buying their dream homes. The larger down payment you make, the lower your monthly housing costs will be. But Freddie Mac urges you to remember this. It's no doubt an added cost, but it's enabling you to buy now and begin building equity versus waiting 5 to 10 years to build enough savings for a 20% down payment. Now, borrowers who can qualify for a VA loan can make no down payment and not be required to pay any form of mortgage insurance. That's one of the many benefits of a VA loan. That's just one of the reasons why I think VA loans are the best way to finance a home, and I encourage anyone who's eligible for a VA loan to consider using it. Now, remember this. FHA loans are backed by the federal government. Conforming loans are not backed by the government, so if you're getting an FHA loan rather than a conforming loan, you'll have to keep paying the annual PMI premiums for the life of the FHA loan. So unlike PMI on conforming loans, you can't drop FHA mortgage insurance when your equity reaches 20 or 25%. So let's take a look at a moment for how much PMI is going to add to your monthly mortgage payment. Besides your credit score, the big determining factor is your loan-to-value ratio, i.e. the larger the down payment you make, the less risk to the lender that you might default on the loan and merely walk away from that money that you invested in your home. So the larger your down payment, which lowers your loan-to-value ratio, the lower your insurance payment will be. Now, this chart shows if your down payment is between 5% to 10%, your PMI premium will be 0.62% of the money borrowed, or approximately $51.67 per month per $100,000 borrowed. If your down payment is 10 to 15%, your PMI premium will be 0.44% of the money borrowed, or approximately $36.67 per $100,000 borrowed. And if your payment is 15% or greater, your PMI premium will be 0.27% of the money borrowed, or approximately $22.50 per $100,000 borrowed. So let's walk through an example to make sure I've explained how to calculate what your PMI cost might be. Let's assume you're buying a home for $535,000, and you are putting $35,000 down as your down payment, leaving a loan amount of $500,000. That means your loan amount to the value of the home is 93.5%. When we look at the chart above, we see with a loan-to-value percentage of 93.5%, our PMI is going to be 0.62% of the loan amount. That makes an annual PMI premium a total of $3,100, and when we divide that by 12 months to get your monthly amount, that means you'll be paying an additional $258.33 per month on top of your monthly mortgage payment until you get to 20% equity, either through the accumulation of your monthly payments or through a combination of payments plus appreciation. Once you hit that 20% equity mark, you can have the PMI payment removed from your monthly payment unless you have an FHA loan, which we talked about earlier. But there are ways to work around that too that we just don't have time for in today's video. But the bottom line is this. If you have questions about whether you should buy now or wait until you've saved a larger down payment, let's get together to discuss the current market conditions, and I'll help you make the best decision for you and your family. There are too many variables to cover in this short video, so let's sit down together and figure out which variables may work in your favor and which variables may work against you. I hope you found value in today's video. If you did, click that subscribe button and click that reminder bell so you'll be notified when I post new videos. If you like today's video, give it a thumbs up. That's feedback to me that I'm giving you information of value. And finally, please share this link with someone you know who can benefit from the information on this YouTube channel. You can find my email address and my telephone number in the description below. Call me or email me. I would love to hear from you, and I'd love to represent you in your next real estate transaction. I'm Bob.Woolverton. I'm with Pure Real Estate in Bellevue, Washington. Here on YouTube, I'm known as your Northwest Realty Advisor. Every Tuesday morning at 7 a.m., I post new videos about buying, selling, or investing in real estate, as well as some home tours and listing videos. I'll see you next week.